Okay, guys, just gonna break down the forecasts for the week ahead. As I said before, I'm only going to be trading GU, possibly for the next couple of weeks. Although there are a few other pairs that possibly could be looked into. I'm going to actually focus upon what I agreed in the first instance. So what we're going to do is let's just have a look at the chart, and in terms of our forecast for the week ahead, what we're currently seeing is, as per last week's forecast, we can see that GU is effectively in a bearish trend, and I've been saying this since September of this year, where we've been looking for GU to continue down to lower levels of liquidity that are possibly going to be tapped into this quarter, to pick up from the COVID spike down last year, pick up this liquidity, and then 2022 would possibly be a year for the bullish reversal of GU back up to the levels that we're familiar with before the pandemic and all sorts. However, what we're actually currently interested in, these are just areas that I had marked up historically from before. We are only interested in areas that are within the range that we are currently looking to trade within. All of this does not matter. So let's get back to this area. What we're currently seeing is that over the past few weeks, obviously we've been in a bearish trend. We've tapped into a weekly demand level with our moves this week, again retesting the zone. So the price came in, tapped the demand, reacted off the demand, came off a weekly supply candle, and it sold down beautifully back into this demand break of structure again. So we are now sitting within weekly demand. So we know that we're looking for price to then retrace out of this to give us a reaction to then either continue bullish possibly out of this demand, or to then react and continue bearish. What we can then do is go down to the lower time frames, from that to the daily. We've got our weekly levels marked up. Let me just explain that. So effectively, these are areas that we're looking for the market to react out of. This is the open of a candle on the daily chart, and this is the wick of that candle. So these are inefficient price areas that we're looking for the market to tap into. And as we can see, it's kind of tapped into the open of the following supply candle, the close of the previous demand candle on the daily, and it is now moving away to the upside. So as we can see, this candle has been tested. We've taken the open of the candle, inefficient price is below in the wick, price has tapped very slightly into it, and when we look at how it's reacted beautifully off that demand candle, and we're now seeing a bullish engulfing candle be formed. What we're looking to see is now, where will the market target in terms of relative zones for areas of interest, points of interest, or even a trade up into those future sells. So we can see there's a supply candle sitting here. This was a supply candle that was actually induced in the market to then sell the market down, break of structure on the lower time frame here on the daily chart. The market's tapped into demand and is now reacting off the demand. So what we're looking to see is whether our market open next week either reacts into the formation of this bullish engulfing candle, or it continues bullish straight off the bat into the supply levels and then reacts off that. The reason that we have this area marked up is because the wick of this candle, the supply candle, is the most inefficient price area. Price is only looking to cover itself. This is not an OB, as people would term. It's actually just a supply candle within an overall continuation bearish. So the premium entry for these type of candles is on the wick. Anything that sits above a range, like this candle, we would be looking at the open of the candle to be our premium entry of area of interest, because everything above the candle here is our inefficient zone, where stop losses and sell stops and all sorts will be sitting in the market for people that have taken trades to the downside here, and the banks will be looking to come and liquidate. Just to explain that, so on a range, we are looking at people that have put their sell stops like this, and they've got their stop losses above this area as they've traded out of the open of this candle as it comes and gets taken by the bearish engulfing candle. This would be the most efficient area for them to take their trade. Many people would have taken their trade here as well. However, we use this as our guide for our supply zone. And on candles that are within a range, we look at the wicks as the areas of interest, because this is the most efficient area of price. It just needs to come and cover itself, and it may tap slightly into the wick area here, because obviously people will have their sell stops set within this location. So that's just explaining why the lines are placed where they are. It is a complicated thing. You need to get your head around it. However, we're looking for price to react, open on Sunday, see how it reacts, whether it continues bullish into the supply zone that we've marked up here, and then reacts down. So there may be a chance that market opens because it's shown us a reaction from an inefficient supply area here. As well, on the lower time frame, we can see on the 1 hour there's a supply candle sitting right there. Market's slowed down, been put on the brakes, and then it's now reacting slightly off this supply candle to show us what type of reaction is going to occur. We need to look at what happens during the open of the market. It may well come down, tap into demand on the lower time frame, and then go back up. We're just going to see exactly how that plays out. So what we're anticipating is for the market to either respect this supply candle, show us a short-term rejection into this demand candle that broke structure to the upside, and is now taking highs previously, as we can see with this wick. So we want to see it come test this area, which is why I've got this indicative phantom trade placed here. Market comes in, rejects out of this area, goes bullish. We get in on this trade for buys to then sell down. So when we get on this trade, I may basically stack this as two positions. One effectively targeting the supply zone, one leaving it open to see whether it actually continues further up and goes deeper for a retracement, which is a smart thing to do. Take your profits off the table, leave one trade running, and just see if it carries on and it becomes a runner for the long move. So we're looking for short-term sell down, testing of this wick possibly, testing of the demand zone below possibly, to then buy back up into the supply zone. And then we're going to look for reactions out of this supply zone, which is a supply zone on the higher time frame. We're not currently targeting this because it's a lower time frame supply. The higher time frame supply is a more pivotal point for us in the market. It basically, the market reacts better to higher time frame supply areas. So what we're actually looking for is we're looking for this daily supply wick to be tapped into, and then to see a reaction and rejection from there. And when the market gets to this point, obviously there'll be an alert set. See how the market starts to react. Look for the rejection out of this area, possible lower time frame change of character, and then sells to the downside, which is why this phantom trade is here. So these are just things to jog my memory in regards to what my thought process is. But effectively, we're looking to trade out of this demand area here, go long, leave one trade open. If it starts to reverse from here, then fine, we'll close out our trades and get in on the sells. And the sells again can be held long term here as well. If the market then breaks this level, we'll be targeting levels higher up, which is possibly this supply candle, possibly on the 1 hour. We'll see whether it comes and tests this supply candle as well, but we'll only do that once this zone that we'll be looking at is getting invalidated or mitigated. So that is the forecast for this week. It's unfortunately only one pair. I'm only going to be looking at GU. I will try and drop some stuff onto YouTube or my Instagram as I take certain trades as they materialize throughout the week, and just see how it goes. Maybe a very pivotal point in the trading journey for myself as well as others, because I'm now looking to go for higher time frame confirmations, holding trades, swinging trades, stacking trades for long-term runners and cashing trades when they get to higher time frame supply and demand zones and areas of interest. I hope that's helped. Any questions, obviously drop a question in the YouTube comments or message me on Instagram. As always, please do like, share, and subscribe. It does help content to be developed. I'm not basically doing this for money at all. I'm just looking to help people within the FX community to understand the charts a bit better than what they may have, and to provide insight that I've kind of picked up over the past year or so by trialing and erroring certain things and showing you what I see and what I've learned, how to read the charts in terms of market structure, candles, areas of interest, higher time frame structure, order flow, smart money concepts, whatever you want to call it. It's a very, very complicated topic, but when you start piecing it together and putting together the bits that work, it is very, very powerful. And hopefully we'll see that in the coming week. So I wish you guys a good trading week, and hopefully speak to you soon. Take care. Bye.